the odds are stacked against you because
Mm,
you're essentially entering into a world that you know nothing about. And it's true. It really
mm,
is true. They do try to hide a lot of stuff. They try to hide a lot of strategies. They try to create some sort of illusion that they are using AI and algorithms and like they're very, very intense and robust. But in reality, when it's laid out to you, especially as a new young trader like I was when I first started on the institutional desk, it was almost eye opening that I did think and I did drink the Kool-Aid that we were going to be using these algorithms and these intense,
mm.
intense systems, and it was nothing like that. I mean, of course, the algorithms, sure, you have to be a developed coder or developed algorithmic programmer to be able to write these things. But once they're written and they're on the chart, it's like reading Google Maps, essentially. Like it's just
Really?
telling you
Yeah.
buy here, sell there, sell here, buy there. And it became really easy. And that shroud of the illusion of being like this elite establishment totally went away from me. And I
Really?
kind of
Yeah,
got to
okay.
see the
Yeah.
inside. Yeah. So
'Cause I guess it works in their favor, isn't it? Everyone thinks it's all a bit mystical and otherworldly and, I'll never understand it, but
absolutely.
it's kinda Wizard of Oz, pull back the veil, right?
Yes, yes. See the man behind the curtain.
Mm,
You don't have to do that. You really don't have to do that. I, be it with trading, with my indicators, like I like to say, I make money if gold goes up, I make money if gold goes down. There's just a certain way, a certain methodology, a certain framework that you have to follow, and you can do it too.
okay. Well, let's dig into gold a bit because most of us,
Sure.
I think, well, I say most of us, but a lot of people in Australia with more and more people, it seems like everyone is trying to hold some gold and silver.
But the
Yeah.
reality is that's not how the big players operate or the people that are actually making money, extracting money from the gold market or the silver market operate. And institutions, they don't sit there guessing essentially where should gold go, is probably going to keep on going up. They're watching
Mm,
levels. And that's really what my strategy, what my indicators are built on. Levels, liquidity, and essentially knowing where certain things are about to happen. So if you can identify a level, you can wait for it to be achieved, you can wait for the price to get to that level, then
mhm.
you can say with almost extreme certainty that you can then foresee where the price is going to go to next, thus creating profits.
Gotcha. And there's no emotion in that. It's purely indicators. It's purely objective from what I'm hearing. Yeah.
Absolutely. As
Yeah.
absolutely. I mean, of course, we're human, right? We're not robots. We're not AI, not yet. But it is one of the hardest things that traps people in any business, not just trading, not just investing, but it's always the emotions that drive the bus off a cliff, right?
Yeah.
So it's one of the
Gotcha.
hardest things to run away from. But if you can try to suppress them, if you can try to just follow the framework, then you'll be okay. Really tough for you guys. I just kept on reading the headlines, like even at the end when everyone else was like coming out of it and
Mm,
you guys still had, be it lockdowns or
yeah.
I don't know all the stuff, the sending people to camps, like
Yeah.
to go be
It,
quarantine camps. Like what the
yeah.
fuck?
Yeah. It was crazy, huh? It's in. I hit record by the way. So just if we
Oh,
use, we
sorry,
might.
my
And
bad.
that's all right. We might use this. But always end up we capture some uh, good conversation at the beginning
Yeah,
of
for
these
sure.
things. But yeah, your experience in Boston and the US wasn't as extreme as that. Is that sort of
No,
the
I mean, it
takeaway?
was pretty extreme. It was pretty extreme. Like I said, coming into COVID, coming out of COVID, it was actually pretty funny because in the beginning of COVID, the financial services industry, so us being traders on the desk, we were
Mm.
allowed to go into work, which again, just kind of
It
underscores the
tells you a great deal,
tone.
doesn't it?
Yeah, 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 really. It kind of underscores the tone of like how financial services, Wall Street investment bankers, traders, they are the elitists of the
Mm,
world. And even at the beginning of COVID, when we didn't have all of our, rights and liberties stripped away from us, it was still like, yeah, everyone else has to stay home and can't go anywhere, and they have to go to the grocery store at certain times because we had that as well.
mm,
If you were under the age of 60, but like over the age of something, you could go to the grocery store and get your goods, your perishables at a certain time during the
mm.
day, so it was crazy. And of course, being in a major city, I was in between Boston and New York City, and it was insanity, just insanity, but the people eventually started drinking the Kool-Aid, and it was not
Yeah.
fun. when your fellow man kind of turns on you. Yeah, that's never a good.
No, it's I think the hardest part to accept, isn't it?
Yeah.
When, next to the neighbours and friends and family turn on us.
I know.
Um, Tony, being inside the system at that, it's sort of leading into our topic today, but
Yeah.
being inside that system, inside the institutions, banking and trading and things, what did you see that was different? I mean, obviously it's a different world. You're allowed to turn up to work and suddenly the rules didn't apply. Is that how the feeling of it?
Yeah, I mean, that feeling or that elitist mentality really did start to become apparent once I started learning how institutions actually do trade. And, probably a lot of people that have looked at markets or, looked at investing, you start to hear, oh, the institutions know what they're doing. And if you're just, a little guy at home, then, the odds are stacked against you because
Mm,
you're essentially entering into a world that you know nothing about. And it's true. It really
mm,
is true. They do try to hide a lot of stuff. They try to hide a lot of strategies. They try to create some sort of illusion that they are, using AI and algorithms and like they're very, very intense and robust. But in reality, when it's laid out to you, especially as a new young trader like I was when I first started on the institutional desk, it was almost eye opening that I did think and I did drink the Kool-Aid that we were going to be using these algorithms and these intense,
mm,
intense systems. And it was nothing like that. I mean, of course, the algorithms, sure, you have to be a developed coder or developed algorithmic programmer to be able to write these things. But once they're written and they're on the chart, it's like reading Google Maps, essentially. Like it's just
you're right.
telling you
Yeah.
buy here, sell there, sell here, buy there. And it became really easy. And that shroud of the illusion of being like this elite establishment totally went away from me. And I
Really?
kind of
Yeah.
got to
Okay.
see the inside. Yeah. So
Because I guess it works in their favor, isn't it? Everyone thinks it's all a bit mystical and otherworldly and, I'll never understand it, but
absolutely.
it's kind of Wizard of Oz, pull back the veil, right?
Yes. Yes. See the man behind the curtain.
Mm. Well, that's a good intro here to what we want to talk about today. So, the podcast discussion topic is how these big players and institutions actually trade gold and what it means for us at home as everyday punters. So, I've invited Tony Barassi here with us, who you've been listening to here now. Tony, I'll get you to do your intro for us. You're an institutional trader. What's that mean? Give us a quick 2-minute intro of your background, please.
Yeah.
Probably easier than
Absolutely.
me botching it.
Absolutely. Well, again, Adam, the people love hearing from you. I love hearing from you. I mean, I'm sure that you could give my intro better than I, but nonetheless, yeah, my name is Tony Barassi. I'm an ex-institutional trader. I didn't really come up the typical path to become a trader. I was actually plucked out of university and put onto the institutional desk quite early. So I learned the environment and where decisions are made, what the rules are, what you can and can't do. And I work for the institutional side, be it hedge funds, the big pools of money, family offices, the
Mm,
billionaires that everybody hates, right? And I slowly found out that it was kind of a place where you can't get emotional because when you're dealing with markets, it's emotions that are the first thing to punish you. So I definitely learned a lot. I was on the institutional desk for about 7 years. I worked with algorithmic traders. I worked with hedge funds. I ran my own book. I traded in my last year on the institutional side, $3.5 billion worth of securities in multiple different types of markets. I've held commodity trading roles in the past, obviously. Kind of commodities have been going through a pandemonium cycle in
mhm,
the last couple of months, in the last year even gold, silver, crude oil, you name it, and
mhm.
it's made headlines. So, these experiences really, kind of positioned me to learn the ins and outs of markets, learn the ins and outs of trading, and then get out, hopefully unscathed. I like to think that I'm unscathed, but now kind of tell the world what it is that's going on behind the curtain, as we were joking about earlier.
Okay. What's your motivation for that? It's kind of maybe an obvious question, but what's your motivation to do that?
Yeah. Well, I like to say my intentions are always positive, but
Mhm,
there's always sometimes two sides of the same coin. My motivation is really to help as many people as I can. I don't like to say it, but become not financially free, but at least financially independent,
mm,
because things are really hard right now. Up and down the income scales. Whether you don't have a job, and you're just at home and you're kind of grinding your gears trying to figure out how I can make money,
Mm,
without going and having to do something extremely arduous like jumping on an oil rig, or if you're just even have like a mid-tier white collar job and you're slowly finding that even $100,000 a year salary doesn't cut it
mm,
anymore.
yeah,
And you're just like, what else do I need to do? So I really do believe that trading simplistically, because trading does not have to be overcomplicated, as I thought, prior to joining the institutional desk and
mm,
then ultimately leaving. Trading simply is really the key to success in trading. So that's really my main motivation behind all of this. And of course,
mm.
education, right? Because if I can teach you something that you can use for years down the line, or potentially get another generation or a friend into and learn a skill for life, then I think I've done my job.
Cool. Yeah, and look, mate, I think what you just said is, having what used to be a good job, you could buy a house and live well. That equation doesn't stack up anymore. I think in Sydney, I read recently, excuse me, you need, I don't know, $240,000 worth of household income in order to
Mhm.
afford an average home in Sydney, in Australia. So that is insane, and that doesn't leave, it doesn't leave room for life and your
Mhm.
kids and all the important stuff, because everyone's on the treadmill too fast. And the other
Yeah,
part is it makes you very vulnerable to, the threat of losing a job, or, take this vaccine if you're not, if you, or lose your job. And so, there's that's the uncoercible part we talk about around here is financial insecurity puts you in a very vulnerable place when you're trying to be controlled by something that is against your will. So a lot of the financial stuff we talk about here is sort of designed not necessarily just about getting rich or whatever. We certainly don't have any problem with that, but it's about creating this level of solidness, where you can't unshakable or
of
uncoercible.
course.
Like you can't tell us what to do
Absolutely.
because we're okay.
Yeah, absolutely. And the only thing that I'll add to that is, again, when you talk about trading, when you talk about investing, whatever it might be, I've been around the block once or twice. I've been involved in a couple of other businesses as well
Mhm.
outside of the financial space. I mean, I've sold products, I've sold services. I actually had an Amazon company that did quite well, sold that, but it was a headache. So I understand that there are other ways to, as they say, generate passive income in the modern world. But bar none, hands down, trading is definitely, top one or top two that takes minimal amount of effort. But I will say it does take a large amount of intellectual commitment, because you have to find someone that has truthfully done it successfully in the past. And I think that's again, when we talk about trust, not just in the grubberment, as they say, but it's also trust in each other, trust in commerce. There are so many, poor actors or bad actors out there that are trying to, kind of sell you a dream, right? Something
Mm,
that is just never going to come to fruition. And again, that was, going back to your original question, like, why are you doing this? This is, again, one of the reasons why I am trying to do this, because there's a lot of garbage out there. And
mm,
a lot of people that are even trying to sell investment services that have never been an investor before, or maybe they've
mm.
never at least been a successful investor. So I think, in this day and age, it's 2026, everything should be subject to proof. And, I hope that I am living proof.
It's a really good point because yeah, that seems to be. I guess that was my first question I had written down. Is like the noise, the YouTubers and the
Mhm.
headlines out there and the emotional swing. If you look at the headlines around,
Yep.
particularly around gold and silver at the moment, which is something I want to dig into, but it's just it feels like every day is a new sort of emotional hook driving people one way or the other, and whether it's Bitcoin or gold or whatever. But, and your philosophy is what I read earlier was your philosophy is that, don't be driven by headlines, don't be
Mhm.
driven by emotion. It's just practical price indicators and things. Is that
Mhm.
is that a fair assessment?
It is. It definitely is. It definitely
Okay.
is. I like to say, there's multiple ways that you can say it, but it's just keep it simple, right? Because that's what I learned, essentially from the horse's mouth.
So
It
there's
was keep it
institutions.
simple. Yeah,
Mm,
the institutions. Absolutely. That's what they were teaching me. Because again, I kind of came in hitting the ground running saying, I know how to, kind of program some of these things and we're going to use this indicator and that indicator and this calculation is good for this. And, my boss almost slapped me upside the head first
Yeah.
year in. He's like, we are going to take you and we're going to make you into something. We're going to teach you how it's done.
Right.
So either you listen or, you can kind of get a move on. So, I mean, it really is tough for people to watch the headlines because nowadays we're so inundated, right? Every single day, you have a notification on your phone. You have, people texting each other, people sending each other,
Mm.
be it tweets, Instagram messages, Facebook, whatever. Did you see this? Did you see that? You really can't get away from it. So, of course, if you see a headline and maybe you missed out on a move last time,
Yeah.
I saw gold, 3 months ago it was in the news saying it's making new highs, all-time highs, and I didn't buy then, and now I'm hearing about it again. Maybe I should go run out and buy
Yeah.
gold, buy silver, buy whatever it is that's in the news. And I'm just kind of here to say is that you don't have to do that. You really don't have to do that. I be it with trading, with my indicators. Like I like to say, I make money if gold goes up. I make money if gold goes down. There's just a certain way, a certain methodology, a certain framework that you have to follow, and you can do it too.
Okay. Well, let's dig into gold a bit because most of us,
Sure.
I think, well, I say most of us, but a lot of people in Australia, with more and more people, it seems like everyone is trying to hold some gold and silver, in various proportions. But most people think of it as something just to hang on to and buy it and hold it and sit on it, as in real bullion, and stick it under your pillow.
Yeah, absolutely.
But your approach is, or the institutional approach, and what you've learned is obviously there's another option. I mean,
Of course.
yes,
Absolutely. So I think the
mm,
biggest thing that people get wrong is that, like as you said, right? Sometimes they see it in the headlines, they want to buy it, and then they say, "Hey, have I missed a ride? Is it too early? Is it too late? Am I buying at the high?" And then they just run out and buy, and then they stuff it under their mattress, and that's it. They're done,
mm,
right? But the
yeah,
reality is that's not how the big players operate, or the people that are actually making money, extracting money from the gold market or the silver market operate. And institutions, they don't sit there guessing essentially where should gold go, is probably going to keep on going up. They're watching
mm,
levels. And that's really what my strategy, what my indicators are built on. Levels, liquidity, and essentially knowing where certain things are about to happen. So if you can identify a level, you can wait for it to be achieved, you can wait for the price to get to that level, then
mhm.
you can say with almost extreme certainty that you can then foresee where the price is going to go to next, thus creating profits.
Gotcha. And there's no emotion in that. It's purely indicators. It's purely objective from what I'm hearing. Yeah.
Absolutely.
Yeah.
Absolutely. I mean, of course, we're human, right? We're not robots. We're not AI, not yet. But it is one of the hardest things that traps people in any business, not just trading, not just investing, but it's always the emotions that drive the bus off a cliff, right?
Yeah.
So it's one of the
Gotcha.
hardest things to run away
Yeah.
from. But if you can try to suppress them, if you can try to just follow the framework, then you'll be okay.
And look, the frameworks you're discussing are things you train people on this, yeah? So that's part of what you offer in your training is you're giving people those tools and that.
Absolutely,
Yeah.
absolutely.
Okay.
So in
Yeah.
my training with I'll call them students. Why not? Because like I said, they are learning something. You are coming in to a program that allows you to learn a new skill and hopefully a new skill for life. So nonetheless, you're constantly learning. You're constantly understanding why the mechanics behind the indicator are telling you to do something.
Yeah.
I walk everyone through this is what the buy trade looks like. This is what a sell trade looks like, and then multiple different avenues of what could happen after that, which I think when people are trying to learn trading or when people are trying to learn a new skill, right? The world is very random, right? You can't just hit record and say it's going to work out like this
Mm.
every single time. So what I've done is I've really made an investment because I know people are making an investment in me, in my indicator, and I've made the investment to show them as many times possible the different types of setups that might occur and how
Mhm.
to handle them so that they're not alone.
Yeah. Why gold though? Like you
Yeah.
obviously have traded across all these different commodities and things.
Yeah.
Why gold in
That
this
is an
instance?
awesome question. That is an awesome question.
Mm.
So it's not only why gold. I will say it's why precious metals. And this is not to nerd out, and I'm not going to get too technical. But why gold? Well, because it's an amazing asset. I mean, it is literally time tested, true as an
Mm,
arrow. I mean,
yep.
you go back to any times, biblical times, the Chinese Ming Dynasty, whatever it is.
Mhm.
Gold has stood the test of time, and there's a reason for it. Fast forward to modern day, why does this work so well with gold? Well, because I mean, I've traded it for a long time. I've traded precious metals. Like I said, I have traded on many different asset classes when I was doing commodities, when I was doing institutional trading, and on the personal side as well. This indicator works very well in precious metals specifically because of the makeup of the market. What do I
Okay.
mean by that? So the precious metals markets, they are some of the most liquid markets in the world, and there's always one or two nice cascading moves, be it to the upside or be it to the downside, that happen in gold and silver every single day. And with my indicator, it works. I'm not going to, pat myself on the back here, but toot my own horn, but it works really well. And
Okay.
if you can catch those one or two moves per day, you're going to do very well in this business.
Okay. And is that predicated on exacerbated by the global uncertainty and there's war and there's threats of more war and there's so much going on in the world.
Absolutely. So
Does that
it's really
amplify this?
because of the major players that are involved in these markets. Yes, absolutely. It's because of the people that are trading these things. It's not, of course, if we looked at who is trading the gold market, yes, there's people at home. Yes, there's institutions, but there's also massive, massive swaths of wealth, sovereign wealth funds that are trading billions, hundreds of billions, trillions of dollars, not every single day, but they are transacting in the market. There are full on central banks that are transacting in the gold market. So when these guys decide to enter or decide to exit the market, as long as you can identify the same level that they are waiting for
Mm,
before they enter, then you can do exactly what they do. And that's what I aim to do with my indicator.
okay. So this is again, just to reiterate, this is just following or not following, but it's replicating the institutional approach. And it's just adopting, it's not replicating,
Exactly.
adopting an institutional approach, which is kind of the opposite. Most just do
Exactly.
it.
Exactly. And I mean,
Mm,
going back, no, it definitely is. It's adopting the approach, but having the power to actually see the same levels that they're waiting for.
mm,
That's really the game changer. But then, of course, I always like to say, I could still hand you the money printer, and if you don't have the owner's manual or know how to operate it, then what good is it?
yeah.
And that's really where it comes in with the modules that I've created, the modules that are recorded, and the entire program put together. If you can follow a recipe, you can follow this. But going back to your previous question there, why gold? Why is the market so hot? And it is because of the geopolitical risks that are constantly present in
Mm,
2025 and 2026. They're constantly happening. And as that continues to unfold, these markets, gold, silver, precious metals, I mean, even, look at crude oil most recently, these markets, they get more and more liquidity, more and more players, more and more people trading it, which means larger moves. And if you're on the right side of it, means more money. So that is the allure, and that is the way that's the ideal thing that we're looking to happen.
okay. Mate, tell me a bit about trading as like what you're proposing here, because a lot of people will listen to this and go, "Well, this sounds good, but it's kind of out. It's not my skill set, and it's maybe I haven't got the money to do it, or I haven't got the time." Like, who's is trading? Is it me? There's a few questions. Does it mean sitting in front of a computer screen all day looking at blips going up and down? Do I have to have a lot of money to start?
No.
Is it not
Yeah.
suitable if I'm working full time? Like, give me some indicator what it looks like and what can be done with it.
Yeah, absolutely. So what
Yeah.
does the day-to-day look like, right?
Yeah.
What do I need? What is my investment, Tony, right? That's what I get a lot, right?
Yeah.
So I made this indicator, and I really am excited for people to actually see it on a live chart, because that's really where you get this aha moment and it really culminates. And what I mean by that is, no, you're not sitting at the chart all day. You're absolutely not. A lot of other indicators that are out there are indeed like that. You
Mm,
have to be watching every single tick, and you got to
mm,
pinpoint it just
mm,
perfectly. And if you don't, then for lack of a better term, you're hosed. But nonetheless, mine is really not like that. Why? Because the levels that are calculated on your chart in real time, they're very clearly identified. So I like to say if the price is trading in between the two levels that you're waiting for, then there's no trade. Then you don't do anything. Then you go do anything else. Get away from the computer. Run as far as you can because you don't have to be sitting there staring at the chart all day. You set a
Yeah.
couple of alerts, boom, you can go about your day, right? And if those alerts never get hit, then hey, there was no trade, and you wait for tomorrow. In terms of monies, how much money? I always get that question a lot, right? Because we're talking about futures trading here. Some people have been in futures, been trading futures. We have veteran traders, but then we also have people that have never even heard of a future. What is a future? What is a futures
Mm.
contract? And I talk about that. Don't worry. But how much money do I need to get started? It's a little bit of an ambiguous question because I'm not asking you to go out and make a brokerage account, fund it with 25,000 US dollars and then give it a go,
Mm.
right? In my program, I actually give everyone that signs up, everyone that purchases the program, the indicator, a free prop account. Okay. What is that? A prop account is a proprietary trading account. So it's essentially, I'm giving out a simulated account, a simulated funded account, and usually they're funded with like $50,000 so that you can go out and trade in the live market. But here's the catch. Like I said, you don't have to risk your own money, risk tens of thousands, or go out and
Mm.
make a brokerage account and trade in the live market, potentially lose. You're trading this simulated money in the live market.
Mhm.
Okay, Tony, but I'm going to be, doing this every single day. Like that's a lot. Is this just practice? No, it's not. So I partnered with a prop firm called Prop Ed Capital. That's the name. And what they do is they give you this account. If you do well, then you can withdraw real money from this simulated account as long as you hit a couple of profit goals. Like you're consistent. I think you have to make, you know, you can take as long as you want. But the main idea is you don't need any money. Number one, right when you enter the program, you get that prop account. It's included in the program. And number two, you do not have to go out and create a brokerage account, fund it, and then essentially give the market a go. Whether you're just starting in futures and you don't know what the heck the market even is, or if you've been doing it for a long time and you want to test out the indicator, there is really no risk.
So, mate, the question to lead into here now is just in terms of for people seeing trading as a potential option, what you teach or what others are teaching, I guess trading generally, assuming
Mhm.
there's the education there and they've got some systems to follow. People, is it a genuine thing for people to start transitioning out of employment, or is it creating additional income streams? What have you seen happen for people? Because
Yeah.
yeah, I think it's fair to say not everyone's suited to trading in my maybe limited experience. Some people aren't
Mm.
wired that way and prefer to do other things or better suited to other things. But what do you see happening on the ground with people who are getting into this and sort of discovering an income stream? And is there a real life transition happening there for people? Is it a real option, or is it something we should see as an adjunct, if you like?
Yeah, absolutely. I mean, it really does come down to the individual. And I know that you said, some people just aren't really geared to trading. And the only thing that I'll say to that is some of the most successful traders that I've ever met in my entire career doing
Hmm.
this started as some of the most unconventional people that thought, I would never be doing this. And they actually, many of them in the beginning thought I would never be good at this because again, we've been married to this belief of maybe trading is for super analytical minds and people with PhDs in math. And there's just no way
Mm.
that I could ever try to extrapolate money from a market. I don't even know what that even means. Right. So again, but there are, again, like two sides to the same coin. And we do have people that have been able to, again, I hate to say like become financially independent, but yeah, make revenue streams, be it for themselves, for their family, to the tune of I mean, I could say things, and of course, it's going to sound totally up in the air or unbelievable. But I was actually just talking to another student 2 weeks ago, and I wish, of course, it was the same week that we were recording this podcast because it'd be great. I could say he came out and he made 60,000 US dollars in one trade over, I think it was 30 minutes or even less. I think it was like 25 minutes. $60,000.
Mm.
So, I mean, of course, maybe he got a little bit lucky because, of course, those results aren't across the
Yeah,
board.
yeah,
Not
of course.
everybody's making it like
Yeah.
that, of course. But nonetheless, yeah, I think that if you at least give it a go, if you at least give it a try and think, come in with an open mind, then you will do well again. But also, I will say it does come down to the teacher. And like we were talking before, there's a lot of information out there. There's a lot of different indicators, different strategies out there in trading where I can tell you, if I went through that program, I still wouldn't be profitable,
Mm.
essentially. Because it's a teacher, because it's a strategy, and because it's just not up to snuff. It's not up to par. But nonetheless, this strategy that I am teaching people is what is used on the institutional desk. And like I said, they're institutions for a reason. They're billionaire family offices for a reason. They're hedge funds for a
Mm.
reason. It's because they're good at what they do. And if you want to be successful in doing anything, you have to find someone that has done it successfully before. And of course, always subject to proof, right?
Mm.
Don't just, believe someone because they have a Lamborghini and they're talking about it on Instagram or Facebook or anything like that. But really, you got to find someone that's done it successfully before, and I hope to be that for a lot of people. So we do see people, be it transitioning, and of course, leaving your day job is never advised. But I will say, if you see this as something that you can do progressively for more than just a month, 2 months, 3 months, whatever it might be, and you actually want it,
Mhm.
then that's a whole different story. Then there's really nothing that can stop you from leaving your day job, being successful in this.
That's pretty good, honest advice. Yeah, no, that's good 'cause that's where a lot of people. I get a lot of questions after podcasts like this. People are like, is this
Mhm,
really for me? And I'm like, well,
mhm.
and I've always kind of gone back to that thing. I think some people aren't suited to it, but as you just said, it's a matter of discipline, and
It is.
maybe it's time to rethink some of these assumptions.
It's true. It's very true. I mean, the only thing that's the hardest part for all of my students, and it's even hard for me. I always love to tell them because they tell me about wins over the week, losses over the week, where they might have gotten tripped up, and I'm right there with them. I don't want them to think just because I am the creator of this strategy that I'm somehow immune. Like I make mistakes. I take losing days, losing trades. It's not all sunshine and rainbows and
Mm.
trips to the bank. There are bad days. And I always say trading, it's just like anything else in life. If you're having a bad day in your personal life, it might show up in other areas, right? It might show up in your trading. It might
Mm.
show up in you driving to and from work and doing road rage on the highway, the freeway.
Mm.
But again, we're not robots. But everyone has their struggles. But this program really is designed to help you overcome those struggles, the emotional side of money, of trading, because we're all emotionally tied to money, right? We need it. We cannot get away from it. But nonetheless, we talk about it in the course.
Yeah, and look, on that note, let's wrap this up with. I want to get your take on a few things on the ground again. Just come back to
Of
where we
course.
started here, and like being inside these institutions, which I've never done. I've never actually had a proper job in the way that most people have, and I've never
I
been
love
inside
that.
a. I've never been inside a. I did have a job once. I was a bouncer, when I was in the 20s. But when you're inside these institutions and the volatility is happening and there's bombs dropping in the Middle East and there's all this, do
Yeah.
they rub their hands and go, "This is great. The world's falling apart and we're going to ride the turbulence out"? What's their attitude towards this stuff? Do
Yeah.
they have a empathy gland in there somewhere, or is it all just about the result? And are they creating
Well, I will
chaos at
tell
some
you
point?
this, and I will give you the honest answer. It's always a tough thing to comprehend financial markets and how it interacts with the real world because financial markets, economics, statistics, they refine human lives, human people down to numbers,
Mm.
right? And that's always the hardest part. So you almost have to be agnostic. And I'll say it for sure. Yeah, on the institutional desk, inside the belly of the beast, as many people have told me in the past, it can be like that. Yeah. Yeah. Bombs are going off.
Yeah.
Ships are getting blown up. There's a bunch of oil, ecological disasters happening in the Strait of Hormuz for current events. And it's one of those things. How many barrels? 3 million barrels a day being, released or lost or whatever. Okay, good. I'll plug that into the model and see where crude oil is going in the next day and a half.
Mm.
And I'll, buy futures contracts, sell them, buy options, create this massive spread trade on geopolitical disasters,
Mm.
right? So yes, yeah, of course, there is that aspect, and I did see it numerous times. I mean, being there the day that oil went negative, this was happening during COVID when oil was going negative, and if we have enough time for a little story, I'll tell you, I was very entwined with commodity people that were working in commodities, both financially being a trader of them, but then physically. because that's the other part that people don't really understand about commodity markets, that they are physical, right?
Mm.
You can go down to the broker and buy physical gold bars, coins, whatever it might be, and you can go and buy a gold ETF in your SMSF, and it's just electronic, and you never see it. You don't even know what gold even looks, feels like, smells
Mm.
like, anything. Um, so again, when crude oil was going negative, I ended up talking to, well, I didn't talk to the person that did it, but I talked to a natural gas trader,
Mhm.
and he said, "Do you know what they're doing right now down in West Texas? Being over here in the United States."
Yeah.
And I said, "What?" And he's like, "Because oil is now negative, all these people that are storing oil are trying to get rid of it." And I said,
Really?
"Why would they do
Okay.
that?"
Yeah.
And so they're trying to free up storage because they're trying to introduce more capacity to their storage so that they can charge fees for storing it because it's
Oh,
so
okay.
cheap.
Yeah.
And I said, "Well, what are they doing with the oil?" And he says, "They're paying guys $1,000 a load to come in, fill up their truck, and then just go get rid of it." I said, "Well, where are they getting rid of it?" And they're just driving into the middle of the desert, dumping
Really?
it. And again, ecological disaster. And it's one of these
Yeah.
things where it's very interesting, financial markets, geopolitics, and then how it interacts on the global scale
Mm.
through institutions, through central banks, through mom and pop shops on Main Street. It's really is one of the most interesting sectors, interesting industries to be in. I highly recommend it, whether you're young, whether you're old, whether you're looking for something to sink your teeth into, because trading, it's one of the best jobs for a multitude of reasons, because if you get good at it, you can get paid, of course.
Mm.
But also because you don't need an education to be in trading. Okay, you don't need to go to an Ivy League school to be successful in trading. Of course, you need a degree to do it professionally from an institutional standpoint, but you can trade successfully at home and do extremely well
Mm.
without a degree in anything, as long as you have, a proper strategy, proper headspace, a proper mentor.
Mm.
So all else equal, it's one of the best things that I believe anyone can do, or at least try to do.
Right, you've got, I think you told me, an 18-month-old baby boy.
Yes,
So you're a
yes, sir.
young father in that regard, and you
Yes,
see,
sir.
what future do you envisage for your son and your future kids? Okay, this is a big question, I know. I know it's a big question, but sitting as a
It is,
young dad
man.
in the US right now with what's happening and knowing
Yeah.
inside the markets, and I mean, you've been like, what, gut feeling on where it's heading and what are you concerned about, and also what you're hopeful about. I know this is a big
Yeah,
one.
yeah. Absolutely, absolutely. I love the questions. It's a hot seat with Adam. That's what it should be called. No, really, it's a tough world. I definitely understand where people are coming from when they say, I don't want to have a child because I don't want to bring them into this hellscape that we've created,
Mm.
right? And it's seemingly coming true every single day, right? Especially if you watch the news, the terrible, terrible news. But what I envision, both short term and long term, at least here for the U.S., and then maybe how it translates globally, is that we have a problem.
Mhm.
We have a major problem on multiple fronts. Inflation is still not really under control
Mhm.
anywhere. I would like to add, because I know that the central banks in Australia are raising rates, which again plays into, you can't get a mortgage, you
Mm.
can't do many things. Your credit cards start to cost more, your auto loans start to cost more. You can't buy anything. Your
Mm.
dollar doesn't go as far as it used to, and it's slowly but surely continuing to fulfill that prophecy. I'm I'm always cognizant of what's going on, and I do like to say that I am not a nihilist,
Mhm.
but I am hopeful for the future, in that there is opportunity globally. That's what I like to say for many people. And I think it's always funny. They say the American dream now isn't to, buy a house and stay home and, have a family. The American dream is to get out of America,
Mm.
which is a extremely stark reality.
Is that right? That's starting to become a fairly common thing, huh?
It is, especially amongst the younger generation, for sure, because of the affordability crisis that's happening here. And like I said, of course, no one,
Mm.
no one's really agnostic to it across the globe. But the affordability crisis is tough. And then, of course, you bring in AI, you bring in, as we were saying earlier on, the healthcare woes that we have gone through as a human race just in the last 5 years. Be it COVID, be it all the other plagues that are coming out of different parts of the world. And then the government response, right?
Mm.
Trust is just, I really, I would not want to work in the government for sure.
No.
And I definitely wouldn't want to be a PR or a public relations person for any government right now. How do we get the people to trust us again? I would just quit at that point, at that point, because you have a hard job for you. It is a very good question. I am hopeful for the future in that, something has got to give. I don't think that we can continue just dropping bombs across the globe and expecting, nothing to happen. I think that we've gotten to a point where the US economy is an extremely robust economy. I think the Australian, the Asian, even the, Europe, the Russian economy, we're all very robust and we all have a lot to give. And it's one of those things, you got to lay down arms sometimes and you got to, hug it out. That's it. That's it.
Well,
So I'm hopeful of that. Why can't we all just get along type thing? But nonetheless, I'm still very, very bullish on precious metals for many reasons. There is a credit crunch happening over here in the United States. If you look at the price of bonds, if you look at the treasury market, you look at the Bitcoin market, which is always an extreme tell for speculative assets. It was always a tough thing. People were started to say when Bitcoin was at 120,000 that it's digital gold, it's
mm,
digital gold, and then the 50 or 45% sell off that
yeah,
ensued after that. It's been tough. I do think that there are a lot of global government actors that are working beneath the surface to kind of erode Bitcoin from what it's trying to be, right? A decentralized currency.
yeah.
So I think it's definitely worth a look. It's definitely worth a look if it's 70,000 US dollars now.
Mhm.
But nonetheless, precious metals, that market has just gone berserk because, like I said, because of the credit issues that have been coming up, because of, the central banks constantly buying it hand over fist, because they just kind of like us, they don't trust the government. And, you'll hear me say it if you guys join into the webinar. It's not just us that doesn't trust the government. The central banks also don't trust the government, but they have the power to actually do something about it. So,
Mm.
you constantly see the DXY, the dollar index going lower and lower. So the dollar's being, again, eroded in value. And what's going up? Where are those dollars going in? They're going into things like gold, going into things like, silver to a smaller extent, but real assets to protect real wealth.
That's a good one to land on, I think, and maybe wrap up on, mate, because I think that's a lot of us realizing that real assets have, it's see, touch,
Outperformed.
and smell it,
It's
as
a
you said
safe
earlier.
place. Yeah.
Yeah. Yeah. Oh, well, Tony, thank you, mate. I really appreciate your time and insight into this because I'm genuinely curious, what happens inside these institutions. And I think your
Yeah.
your take on it has been really valuable. And look, we'll post the link to the webinars next week. I think it's Thursday night next week. So it's the 19th today in Australia and the webinar's on the 26th. But yeah, I'll have a
Perfect.
link. So if you're interested to register, folks, have a look on the show notes, grab your spot. I think it's 100 people only. Tony will showcase. Just give us a quick 1 minute snapshot. What will you run through on that webinar? Why should people show up? Obviously, you're going to
Yeah.
talk more about your strategy and demonstrate it, but tell us a bit more.
Absolutely.
Mm.
Absolutely. So, I mean, everyone should tune in. If you want to learn something, because I'm going to be, covering again what's kind of going on underneath the hood on the global precious metals market and what's going on there. I'm going to unveil the indicator. You're going to be able to see it, touch it, feel it,
Hmm.
and I'm going to walk through the strategy that you'll be using should you choose to take a shot,
Yep.
change your life. And then, right at the end, we're gonna do some Q&A. So I mean, I love the questions. I know that sometimes I go off on tangents, but I got a lot to say. I'm sorry about that. But nonetheless, it's gonna be very informative. It's gonna be very interesting, and for sure, you can come in and take a look at an opportunity.
Beautiful. Thanks, Tony. We look forward to next week. We'll do this again in more depth on the webinar.
Awesome.
All the
Thanks so
best.
much, Adam.